get going. So, started this morning, and we were basically here before our 15-minute. Now, we are inside of this, and if this was a 1-minute chart, right, where we had a spike down and then was doing this, we're essentially expecting it to trade into that area of interest. Lethargic movement leads to, ideally, failure and then a rejection. And we're looking for the short once what? Once our order flow snaps and down we go. Right? That's pretty much our methodology. So we had lethargic movement here. This tap back in had a real hard time, even if we were only going to take this low and then run. That was a possibility, right? Because we had our higher time frame change in order flow here. A low, high, a low, high. Trades back in, leaves, right? Trades back in, leaves. And we got held up here, which then sent us back down. But you'll notice we didn't break that low either. So we were inside of this swing range, which then came up. And we had our change in order flow that occurred here on the 15-minute time frame, which then sent us underneath this low. That's important. That's important because we have low resistance here. We got our barbecue. We also have low resistance here. All these highs. So we can run either way, which is pretty much how I approach the market anyways. We have an edge. I expect the market to trade one way or the other. And then we align ourselves at the point where the market decides where it wants to go. We use price action for that. And then we use our lower time frame for swings. Right? So we have our 15-minute zone here, the first 15-minute candle. We'll talk more about this in the coming days. That gives us our area of interest. Those of you guys that have heard me talk about measured moves, it's something a little bit similar, right? Usually the 1.25 of that extension is terminus, because the measured move is, if you've got a leg that's 20 points and then you break out, you expect the next leg to also be 20 points. Yo, we good? Sorry, lads. Right? So you got this range, and now we're expecting that range to expand. And if it expands to 1.25, we usually deem that to be overextended, and we're expected to trade back into the range itself. Right? So Dennis and Mikey have been going over a lot of this stuff quite heavily, where we've got this 15-minute opening range. We now have a measured move. Does that align with anything? Yes, it does. What did we talk about? We have all this liquidity. We ran it out. And now we're expecting, if we fail, we're going to have a beautiful move back in, which is the methodology. Cool. That's a little bit of a higher time frame plan of action. If we start letting go, we know we're going this way. If we start rallying in the morning, then we're probably taking all of these. And either way that goes, we're going to be ready for it. So what does that mean? It means that when we're looking in the morning and we've got this strong move, order flow is based off of our swings and swing points. A high, a low, a high, a low, a high, a low, a high, a low, a high, a low. You can even say this, right? So if you got caught long essentially before you had this higher time frame push, I mean, even if you weren't on the stream today, it should be fairly simple to suggest in this, we're going lower, right? In this, we're going lower. And then it's, where do we get involved? Well, Mikey's short was in here. Cool. That makes sense. A little bit of internal failure, strong move went away. We were stalking a long, or a short, sorry, under, above this candle. Right? if we're going to trade back up into this area where a decision was made. Ideally, we get our third sweep. 1, 2, that would have been 3. Failure, down we go. Didn't quite get there. I missed it by 1.5 points. So I got to sit on the sides feeling like a dope as I watched this entire movement go down. The old me probably would have shorted here and made money. But as you guys have seen, we're transitioning away from a little bit of a scalping mindset, and I think the bullpen will be much, much better for that. Not to mention that, as you guys know, we're really leveling up our accounts right now too. Right? So, cool. We've got a downward move. Is it lethargic, or do we expect, based off of how many attempts to reverse the trend, that we're getting close to something if we get failure? Right? Lethargic movement, creating swings, whether they're structural or not, these are attempts to reverse the trend. The only reason we look at them being structural or not is if we're going to trade back in and risk off of them. Right? So we create valid lows. Guess what? When we trade back in, we essentially could short here with the stop above and expect to make money. We then leave. Do we put in a valid low? Not really. Do we trade back into the prior zone? I suppose we did. Right? But that's how you look at that. And then what ends up happening is we're not long. We're not even long in here. I think that's silly. The problem with this long is that we had a 15-minute candle that did not create a credible low. So if we're here and we're looking, well, it's actually there, I think. I suppose it did, didn't it? They did create a 15-minute sweep inside of our area of interest. And I think those of you guys that hit this here, I think that was a very, very quality trade personally. We avoided it because we didn't get exactly what we wanted to see. We already traded into this imbalance. Was kind of looking to see if there was going to be a little bit more accumulation before the run out. Definitely something for us to look at. And typically when you have such a large displacement, it's usually better to wait for this to have an inversion and then some sort of a weak pushback that then allows you to get long. Right? And I think that's also an area of interest that we could have looked at for going long. I think that would have been valid for those of you guys that hit it. Right? The trades that we did end up taking, now that we're getting this push, we're expecting to trade back into the range. So as long as we don't hit that, well, guess what? We're going to be looking for longs. And Mikey's long was actually gorgeous. We validated a 5-minute here. We trade back in. We failed to validate a 1-minute high. Sweep and failure. And we're expecting a violent push off of this. And we certainly got it. Immediate profit targets. Thank you very much. We get our shove back down. Cool. We've now created a higher time frame move. Still haven't touched our target. So if we tap into here, red to green, easy little trade back up into this SNDR area. And that was my long idea, right? Both of which paid out pretty much immediately. Happy days. Does everybody understand why we're essentially avoiding going long in here? Quality trade 1, 2, 3, maybe even 4. Everybody on board with this? Easy to follow? And if you're long, you're certainly kind of looking at, like maybe you take only 20 points of this. Cool. But if that's an A+ setup for you or an A-level setup for you, and you walk after that, then you walk after that, right? It means that we're not shorting in here, and we'll go over, like, if we've hit a terminus level, we'll go over these kind of things too. And I think if we were using manipulations, we probably had something similar in there again. Well, you probably look at this like, right? Manipulation, like immediately in. Nice little bit of confluence. Boom, boom. But I digress. Even all this, happy days, right? However much that was, I think it was $1,400 per ETF account. We're looking at no shorts. Now this I actually flubbed a little bit. I thought got a little bit aggressive on it, expecting follow through, and I was looking for this to trade back into the range. We got our little fair value gap. I was expecting inversion. And then the safer entry is the tap back in, lower prices. Instead, I ended up shorting in here in the midpoint of it, expecting follow through, kind of got chop, 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 and then blast, right? Just took a very small loss on that, fine, whatever. And then sure enough, that ended up being manipulation, which then closed underneath. So now what have we got? Again, we don't have a break in structure. But we have a very strong accumulation, manipulation, and then a strong displacement move down. And when you have a strong displacement move down, usually that's initiative. When you've got a consolidation move that then lets go. And the reason is because if we're going to reverse, the vast majority of reversals that actually end up reversing trends form we've talked about this a lot this week. They form that swing point, which then breaks, and now you've got an area where you're expecting that manipulation to happen. And the reason is because we want institutional sponsorship on the move. So we need that swing point created, and that's because we want major players to be selling here. We then run out everybody early, and then the movement can happen. And we expect a new trend to form after this signature occurs. And this happens on all time frames. So now what are we expecting? We're trading back in. We've got maybe your wombo combo setup. If you're looking at this, cool. Maybe it's from here. I think that's valid. Your stop goes above 544. That ends up being about 25 points in this case. We've also got your inversion here, which is what we're really looking for, right? Because our 15-minute doesn't look that pretty. But what also happened on the 15 that we talked about a lot, right? You've got this high that we've now just failed to validate. And if we can't validate the 15, right? We validated the 5, cool. We want this 1 minute shove to validate the 5 minute. We definitely want to validate a 1 minute low. Next one's the 15. And so on and so forth, right? That's our hierarchy. We expect a 1 minute low to form a 5 minute valid low. And if it can't, well, then we continue lower, right? If we validate a 5, now we're going to try for a 15. Or at least back up to our structural area of interest. But if we can't, and we didn't, guess what? We now tap back into mitigate, and we've got a new trend forming. Right? So this was the banger of a short, in my opinion. This is a trade that, even if you didn't get involved, you should have been stalking for the entry. We should have been stalking for the entry. Right? Somewhere either in the midpoint of the fair value gap that inverted. Maybe you've got your wombo combo spot, right? And you're at least trading it to this. That's 40, 50 points, whatever that is. And you're also expecting this low to go. Bang. Right? Pretty painless trade. And that, especially in this volatility, man, that is all we need. That is all we need. Now this continued on, and we had a lot of discussion on stream today because it was so choppy. It was so choppy in here that we shoved down. What did we get? We had this failure. That's going to send you back up to where your SNDR that broke structure. That makes sense to everybody. Cool. Right? And then the same sort of idea here. Rather than trading up, we made a decision. Slam down from there, but it didn't break this low. So we actually had this strong push, which was a little scary at the time. And it's very, very easy inside of this to go, you know what? I'm hands off because I thought maybe in here, I have an 80-90% chance of taking this low. But now after this, Yeah, we've got targets lower, wherever the 150 that we were talking about a lot. We got targets lower. We've now retraced, broken order flow. It's definitely going to break this one. And if it can't do that, then this lower time frame change in order flow has actually done nothing. We need that intermediate time frame snap and trade back in, and then the higher time frame move that goes down, right? So we got our change in order flow in our lower time frame here, sent us down, right? We might have had some failure, sent us up. We want to see this put in that new low. And as it stands right now, this spiked up. This high hadn't put in a new low yet. We traded up and we were trading sideways. So this was a little hairy. It's definitely not the personality we wanted from short. Why? Because we had strong movement. We had strong movement. And then we had this, which means they're accumulating. And it would be silly to look at this outcome and suggest that this was completely and utterly easy to see. It's definitely going up. And it wasn't until price tipped its hand on this candle here, where we closed there. Guess what? Now price has done what? It's tipped its hand. Why? Because if it was going to rally, this area would have provided a catalyst. They might have manipulated lower and then gone higher. Did we get that? We got that here, but that didn't really generate anything yet. This was a higher time frame shove. But in reality, this area here made a major decision. And as soon as that candle closed there, Mikey and I were like, okay, it's taking this low. Right? So we had this here, that push away, the failure on the 15 minute, all major ideas, major decisions. And we can't get caught up too much in looking at the 1 minute time frame here with what it's doing, what it's failing to do. And that's a little exhausting in this market action, because if you're short from here, or here, or here, or wherever you're involved, and I don't care if you're short from here, right? As long as you're risking properly. I personally wouldn't be short in there, but I can understand making money on it. Like, if you're wrong about what you see, if you don't see this as failure, and you're like, oh, I'll just give it another candle. Well, your another candle in this instant was 35 points, and the follow through was another 39. Right? So you're looking at like $1,400 right there per mini. Not something to hold through, which means that we're kind of sitting there like eyes wide open on every single candle going, I don't want to miss something, because if you miss something, it's violent up, violent down, violent up. Very stressful, very exhausting way of trading. So what we do is we essentially go, you know what? This to me is still very bearish unless I see something extremely conclusive. For me, I think I would have wanted to see an SNDR built that breaks this. Right? Because of the aforementioned 15-minute candle, I'm expecting further downside. Until proven wrong. Until proven wrong. Right? So this, to me, I was still heavily bearish. I definitely wouldn't have been shorting in here because it was not the personality that I was accustomed to in whatever's going on here with selling. Right? But once that happened, there are no longs for the rest of the morning, at least until that low is taken. Period. Because that low is taken, and now we're expecting what? We've got our intermediate time frame move. Traded back in. We're now expecting at least another measured move down. And if we're looking, the idea that we had in the morning, get rid of all this nonsense, we had this. Bless me. So we have final targets about 200 points lower. Missed it by a grand total of about 17 points. 17 points. Right? So we can analyze how price delivers in here. But in reality, the reason that we have the advanced SNDR mechanics isn't just because we love putting out content, love hearing our own voice and saying, oh, look at us, we're doing stuff. Look at all the stuff we're doing. I'm doing stuff. No. It's for actionable stuff throughout the day that we're looking at it and we're going, you know what? This area is now key. And Mikey said that on stream. He said it here. Why? Because that was our SNDR area. There's going to be a major decision made there. What was the decision? Well, it certainly wasn't bullish. And we traded back in here. What was the decision? It certainly wasn't bullish. You could argue wasn't bearish until that failure happened. But then as soon as that failure happens, the, call it 20 or 30% chance we had for a low probability event of a long that was going to fail to validate a 15-minute and then blast through everything went out the window. Which means if the 15-minute and their higher time frame are pointing down, there's no longs in here, there's no longs in here. You might have, if you're very, very crafty, grabbed something in there. I don't think I personally would have. I don't really know whereabouts your 15-minute candle is. Looks like it was actually here. And that's sort of lethargic 3-drive squeeze. But again, those of you guys that were on the stream, I'm pretty sure we did this, didn't we? Now, it took its sweet-ass time, right? Didn't end up taking that high. Right? But wait for these internal failures. And that doesn't necessarily mean that we're going long to this. That's an unfair expectation of price. But it does mean that this bearish move was not enough. And you don't necessarily know that here either. Where do we know that? We know it after, you could argue, the strong movement that then fails, right? So strong buying, run everybody out, continue, cool. But it's got to break this order flow. It did. It tapped back in and we had further upside, wherever it wants to go. And then what happened? Immediate. Thank you very much. Right? Probably in a wombo combo set up from some sort of 5-minute high or whatever here. Nah, probably not. Probably close. Probably not. Right? So, form a bias. We're going to give you guys the video this weekend on this and sort of we'll do it'll be a few part series because we're not going to overload you guys with the all of it on one video. We'll do it in stages. But essentially this traded down all the way down. That didn't even really give failure, but then we got displacement through. You created a 15-minute low, right? Finally got our break in order flow. Finally. Traded back in. Left. Right? I personally would have wanted it a little bit lower, but that is what it is. And that's if you guys are trading from this at all. And then guess what? The exact same signature happened here, that happened here, that happened inverse up here. Here. A million and one things. How was today? Was this week kind of easy to follow, or how are we doing? Any questions about today, or how did it end up? Nothing. All right. Bunch of legends in here. The last thing that I wanted to say, and by the way, Brock, excellent analysis and trade if you took that same one. That's awesome. The last thing that I wanted to say was that it's actually getting very, very cool and amazing to see. Like, Mikey and I didn't take this trade this morning. And we were kind of looking at it going, this is going up, but I can't really justify it. And 4 or 5 different people had the exact same trade in here. They had the exact same short ideas. They had the exact same long ideas. It's awesome seeing a lot of you guys leveling up significantly. Some of you guys are killing it in private and then killing it publicly. And it's really, really, really cool to see the level up that's going on in this group. And it doesn't take more than 15 seconds to look anywhere publicly and see a lot of people having a very, very difficult time because their systems aren't structured. Their entries are haphazard. They're not planning things out or doing the work in private and seeing the results of that. That's not determined by the volatility. We can adjust to the volatility, but in reality, the market doesn't move differently right now. It just doesn't. Parts of it are different. The squeezes are a little bit more violent. Yes. Yes, they are. But in reality, like, we shouldn't be in those squeezes in the first place. Right? Like, what, we going long here? Why? You know, we going like short here? No. We're going like short here? Probably not. Right? People are having a really, really difficult time right now because of the volatility. And it's really cool to see the patience and everybody leveling up. So my hat's off to you guys that are putting in the work and seeing the major results. This week's been, it's been wild. It's been absolutely wild. And that's for us too. You know, Mikey and I don't talk a lot about how our accounts and everything are doing, but man, I'm in uncharted territory myself. So, anyways, yeah, shout out to you guys. You guys are awesome. I'm gonna stop the recording here. I gotta piece them together.